SMF MMT time 10:30 a.m. And let's not forget the time that we've already spent talking about the broader strategies for next week and closing the year end. More importantly is that the MMTs will be given the actual 2011 trade date scenario and be involved in actually plotting out the yearly movement when we start January, and the minute that we hit that tape until the closing bell at the end of January, we're going to take that and we're going to do the complete yearly movements in the indexes and equities as well, and put them in our SMF platform database. That's where markets will be made. That's where, so markets sell off and whatnot. Right now we're going to focus on a 3-minute VXN fear indicator versus the TQQQ 3-minute bull. MMTs, it's important to remember that in your MMT platform, when I'm building ratio momentum this way, and I'm ascending and I'm building here, I'm going to be weakening. I can short the bull outright because I give you trade permissions to get those shares short. So when the bull is dropping in price, you're making money and you're going to know how to take that short. So you're shorting that bull there. You're breaking higher here intraday on the VXN. Now, understanding that that bull has a few equities in it that weight it a certain way and it trades a certain way. So the relevancy of momentum and weakness in the SMF platform is when I'm building directional teeny expansion and half delta expansion. And boy, if I start burning above 1.00 ratio and heading north, then I'm going to break higher. And I know that I'm going to be shorting this side of the market. And there are equities that you can do. So there's lots of trades you can do here. You can go long the intraday calls on heavy contracts, a couple hundred contracts at the right price. Take 20 cents for $4,000 as a market maker. You can also, and this is all intraday, you can buy puts and you can short this both, so you're getting paid 2 SMF debits in this directional movement. And I'm breaking higher here in the platform. And also I can take Amazon intraday, because you see when this breaks down here, Amazon is going to break higher in the brain. So in your SMF platform, it's very important to understand that when I am weakening over here and I was breaking out over here, I'm breaking down here. So when I'm breaking here intraday, then I'm breaking down here. So teeny contraction equals SMF MMT positive debit. These little 369s, and they don't close above the previous downtrends, you can cover and you can snap that long. But I can tell you what, you better be getting back short again. This is just going to be a double teeny range up and down in your platform. But it doesn't matter. I'm still breaking higher here, so I know that these moves are going to fail. And as I start to climax on this side of the move in the price action here, MMTs on that VXN fear indicator, look at that breakdown come there, MMT. And that's teeny contraction. That's the market maker print, teeny failure here to the teeny bottom made here on Amazon. And you, as you started to pull and draw down, that's when Amazon started making the bottom. You could short that when that's taken place. You can also do this Apple trade. Here's an Apple. Now listen, you can see this. When this was breaking out, that fear indicator was breaking out. Here, when Apple went down, and Amazon went down, that meant that TQQ was going to go down. But once the TQQ made its bottoms in the bull run, you can clearly tell where you're making the bottom run right here in Apple. But you can tell when I'm climaxing that breakout, I'm buying puts here, getting paid a debit. I'm short, I'm getting paid another debit. And I've got Amazon working short at the same time. I've got a 180 put in the money here, I'm short, let's say I'm short right here at the teeny break, and I can write it. I can go long a call against my short, take my profits on the call and let my puts keep running and keep my short, because what it is, it's still teeny contraction in your market maker platform called the SMF MMT platform. And so you can put on lots of directional movements at a certain MMT price action part of the day. So basically, these movements, when Apple and Amazon both made their bottoms, here's the Apple bottom, and here's the Amazon spike off the bottom. Now watch, that's when we started to have this reversal. When we finally made the top and exhausted the move on the VXN, and we started the teeny contraction, that's when we were teeny ascending here, and teeny support and teeny ascending here. And those were nice teeny action breakouts. Just in this one was longer in nature, but this was still good for the amount of teenies that it went right back up here. All right, during that reversal here. So that's part of how this bottom held, okay, was because of the top end reversal. When we take a look here, when we're getting made down here on the bull, so here's the bull. So when the bull is getting made down here in your MMT platform at that bottom price action, you've got that MMT contraction in the fear indicator. So they're going to be invert of each other, and you're going to establish where you're exiting and making your MMT transaction based on these actions. Okay? This is a market maker. You're trading at the wholesale price to sell publicly back to the public. That's what your role is. That's what you do. And that's what the platform does for you. And so when we're looking at squaring at mini trades, we're looking at doing all of those things. And there's going to be weakness. I'm going to pull up a Google 15-minute chart right here when Google was sliding that bid. And these are Monday prices, by the way. Here, let me go into the brain. Let me go up to the delta. Here, let me hit 30 deltas. I'll price in the upper market. These are for Monday's prices. Let's hit that. Okay. Let's get back to the brain chamber. Here's the brain chamber. And so we were in the delta chamber. You get voice alerts. You get everything in your MMT platform. You cannot miss the move because the thing talks to you and it teletypes you. Okay. So you got your electronic teletype prints based on what's going on in your price action movements with the public and the market makers. So sliding the bid and walking the dog. Let's take a look at where sliding that bid here on Google worked with that VXN. Once again, Google does the same thing as Apple and Amazon will do. So you got to know where those momentum price action breakouts are going to be at times in the fear indicator, especially when we're historically, and that's historic public data. You never make decisions based on historic public data because the public tends out to be wrong all the time. That's when I'm selling short and buying long as a market maker in price action. This just happens to be on that transaction level. However, there are several other transaction levels that can take immediate transaction in the directional price action failure and very defined price action movements in both. So when I'm climaxing teenying up here in my fear indicator in my market maker platform, I know that something like this in Google is going to happen. This is a 15-minute chart, but let's just deal in 15-minute bars. Gap down, walk that dog, and it kind of stayed narrow all day, which is nice for you MMTs that are trading Google going forward into the new year. Under the master SMF 2011 master report, before any events occur, there'll be two reports. One will outline for the trading full capacity year in 2011, it'll outline its different quarterly trades long and short in advance. Because what they've been doing is they've been sliding the bid lately, and part of the gimmicks is that when they slide the bid, that's when the broader part of the public really believes everything. Once that distribution is out of the way, it's time to walk the frickin' dog. And so you teeny down, gives a 15-minute chart, bam, you get made, the bear and the bull. I'm going to go long the bull when I get this kind of 15-minute breakout. That's going to contribute to that bull trade. And Apple's breaking out with it, and Amazon and Netflix off the bottom and everything else. But then, guess what? When we have that exchange agent between the public pricing model and the actual bid and ask exchange model, we know where to make our transactions so that we get the positive debits. The MMT gets a nice positive SMF teeny up debit and a teeny down debit. And then those teenies add together with the grand total, and it's a fairly decent paycheck to have compared to what the private sector has been going on. And applying the platform, which is only for MMTs, it's not sold to the public, but to empower and enlighten these transactions. And it prices it all out prior to the market even opening. That's the phenomenal part. And it's for these selected people who choose to go from their old shoes and go into the new shoes of what the market's really about on this level, a 5-day level, a 10-day, a 20-day level, right through a 20-day level through a 60-day level, which is a quarterly level of full price action ranges, and applying everything that I'm talking about here, but a little bit different level. Longer term levels versus the short level. The short level is going to give you those positive debits, and your longer term levels is going to even pay you more because they are more of a directional movement that you can also apply on a different time level other than the market maker level. Okay? So once again, when we break down the fear indicators over here, they're breaking out, and this is that VXN once again. And I just want the MMTs, the new ones, to understand how emotion is moved from the transaction. And I can do that in another live video for you, and I'll be happy to do that. Momentum is momentum. What goes on here, you don't watch the stock market print. You're only watching your bid and ask ratio and your IR and a few other things. These ratios down here when they're populating. They're not populating today, but that's what's going to tell you how to get both sides of the MMT debit spreads relative to the market maker transaction model, which is an exchange model. It's not a public model. And SMF is the only one on the internet. Go find me one and come back and tell me. Because there isn't. So it's a different way of doing things here. If you've been down those other models, which I'm sure most of you have, you probably ended up not liking those. The thing that you like about it here is because you got directional control movements and price and failures, and you can have a very fair playing field because everything is already pre-calculated every day. Markets change every day. And the public transaction was, the fear of the public was in play. So when they were being fearful, then stocks were falling big in value. See, they were falling in value. I'm just letting you know the directional movements are invert of each other. Okay, so basically you can see when you get made, that's the time to cover the puts, take your profits and go long the calls off the bottom and reverse and go long off the trade when the bull sets it up and the bottom is really finally here. You have to be a profit taker, MMTs. Otherwise, you got to take the profit and then engage the other side of the market move now. MMTs. And that's what this does for you. It's for your well-being. Certainly, it's not sold to the public, so it's yours, and it gives you the accuracy that one needs in the info panel. So basically what I'm going to tell people here, that the lower end of this half closing bar right here, I will do analysis long term. 147.90 is a very short term bar that was being made down here. That's half that pro action bar right here. And I got my pointer on it, MMTs. I also know that during these transaction periods of the market, my job as a market maker, I'm getting wholesale. So what am I doing? I'm getting wholesale here. So let's take that out. I'm getting wholesale here in that market, and I'm selling short this retail market over here on the bull to go down. And I'm taking things that fall like Apple and Google with put options and shorting those names outright and creating all of those directional movement SMF, MMT, cash positive debit transactions within the public transaction tape. And the public does times at certain places all the time. The MM platform also has all of that priced in. It has every market priced in, whether it's an upper market or a lower market, it doesn't matter. So I'm going to conclude the tape for the new MMT enrollees and let this be a true gift of moving through the next month tape. As we conclude, the last 10 trading days were slide to bid. Tomorrow morning's Monday. And what we're looking for is where this exchange agent and how the public is either moving in. If the public doesn't move in and keep going, well, hey, slide the bid. So basically, when they're not buyers over here, they're selling and getting scared over here. So you want to be one step ahead of them all, MMTs. And that's the gift of being an SMF MMT and making lots of debit transactions within very defined SMF MMT market maker pricing control levels.